Welcome to the Keiser Report Christmas special. I'm Max Keiser. I'm here with Stacy Herbert, the vivacious, the intelligent, the all-singing Stacy Herbert, and our special guest today, the legendary Mitch Feierstein, author of Planet Ponzi. Mitch, nice to see you.
Happy holidays, guys. I hope all is well. Happy Kwanzaa, happy Christmas, happy Merry New Year. The whole lot of it. Great to see you guys.
Mitch, first of all, did you eat in Chinatown for Christmas Day? That was a few days ago?
No, actually, I didn't get to Chinatown because Chinatown in London is a little bit, every time that I've eaten there, I've had a bad experience 24 hours later.
Right. Well, let's jump into this episode. We are in Christmas week here, between Christmas and New Year. We're pre-recording this a little bit because, of course, we're all living the life of Riley. I know you've been in the Caribbean, you've been in Switzerland, you've been in Italy, you've been traveling around the world during this pandemic, having a great life. But one thing, and perhaps during all your travels, you've noticed this, because in 2021, looking back on the year that was, the H word got mentioned first by the likes of Michael Burry, but that stayed in the whole financial sector. But then towards the end of the year, in October, we saw a CEO, Jack Dorsey, mention the H word, which is even worse than the C word, and that is hyperinflation. This triggered quite a few economists. It triggered the Treasury Secretary herself, Janet Yellen, who said inflation was under control. So what do you feel about this word hyperinflation now becoming mainstream? Do you think hyperinflation is going to happen soon? It usually happens suddenly, right? So is 2022 possibly a year that could happen?
It's like, you're walking up a staircase slowly, and then you get pushed down the elevator shaft. The result is catastrophic and it happens within minutes. So it's a similar type of situation. And as far as Jack Dorsey, I've been suspended from Twitter, but it's probably the only thing that I would ever agree with Jack Dorsey on is that we have hyperinflation. And, if we have a chart of the NASDAQ, if you pull it up, you can see the hyperinflation in the way that selective asset prices have absolutely exploded, which has made the currencies worth less. You're buying less with the currencies. And everybody out there knows that there's hyperinflation across the spectrum. I mean, look at oil prices, for example, another chart. You can see that it's up well in the triple digits. It's absolutely screaming. And the talking heads have been wrong. The central banks have been wrong for several decades. Janet Yellen said we'll never see a crisis in our lifetime, another one in 2017. She's also come out and said, I'm going to have escape velocity. We're going to raise interest rates. But you can never taper a Ponzi scheme, and they never did. All they've done is QE infinity, temporary emergency measures that started 13 years ago, and they're continuing right on to today, where the Fed is buying $120 billion worth of paper continuously. So they're filling the bank's coffers with money. We're seeing that the outcome in the stock markets are surging. And the reason why they're surging is not because of productivity. We've got a chart of Goldman Sachs' stock, which illustrates what's been going on in the stock market. It's a buyback fever because the banks can borrow money and all the corporations borrow money at near zero. There's going to be over $1 trillion in buybacks this year and probably more buybacks next year. But the debt is not a bad thing when it's used for productive reasons. But when banks go out and instead of bolstering their balance sheet, speculate by buying their shares back to pay the CEO suites, we have a problem. Stock buybacks are not a really good way to reward shareholders or to build value in a company. You need to take money and invest it in creating good paying jobs, not speculating on financial assets so the CEOs can get rich and they'll cannibalize future earnings. So yes, there is definitely hyperinflation. We've seen it in the oil prices that have been going up for over a year and a half, and nothing is nothing is transitory. Inflation's not transitory. It's a lie. People have to get used to understanding that, look, there's no such thing as fake news. What we have is an outright program of media dishonesty. It's totally dishonest. And And basically, what you need to do is be able to figure out on your own what's going on. And people, the truth is upside down. We can't trust science. We can't trust medicine. We can't trust what the central banks are telling us, our politicians, our governments. They're purposefully crafting dishonest narratives and acting as political activists rather than telling people the way it is. And I think people are reaching an inflection point here. Things could get really dicey at this point.
Right. Well, Mitch, even as recently as 6 months ago, Janet Yellen echoed the comments that Fed chairmen have made now for 15 years, 20 years, that they have to keep interest rates low because they're fighting deflation. This is the actual term they were using up until 6 months ago, that they were fighting deflation, that therefore they had to keep interest rates low. And of course, we've talked about this many times, and we've been saying that there's actually stoking inflation, and it shows up in the asset prices. It doesn't show up in the CPI because those numbers are fraud. As you point out, everything is upside down, including how they report the CPI, the Consumer Price Index. Well, now we've got above trend inflation. We've got the actual reported inflation above 5%. So the answer to this, of course, is to raise interest rates. But if this is not being discussed. I mean, this is what they were waiting for, to raise interest rates. They were waiting for inflation. Well, now they've got it. And it seems like the answer to inflation is the same as the fake deflation, to print more money, Mitch.
It's like if you ever watched the old Peanuts cartoons by Charles Schulz, where you had Lucy put the football down for Charlie Brown and say, kick it, kick it, kick it, and then they pull it away. It's the same thing with you can never taper a Ponzi scheme. Just make believe the football is a Ponzi scheme. When they say they're going to taper, they can't taper because the amount and scope, scale, and magnitude of the debt they have would make them insolvent. They wouldn't be able to service the interest on the debt. Now, the bigger problem that we have is that you have crazy Bernie Sanders, the head of the Senate Finance Committee, who's, just moral hazard means nothing to him. And Stephanie Kelton is one of his advisors who created magic money tree, modern monetary theory. Just print until it explodes. And that's exactly what they're doing. You saw last year or this year, in the middle of the year, where Bernie said that $6.5 trillion of additional stimulus is the minimum that we should put out there. If you think about what's happened, go back to 1998 when we had the first bailout and first case of moral hazard was when long-term capital management got bailed out, and that was $1 billion. And everybody thought that was the end of the world. That was in 98 or 99. And then, of course, after that, we had the dot-com bomb in 2000 to 2001. And if you see what happened with that, the NASDAQ went from 5,132 all the way down to around 1,200. And it was up the staircase and down the elevator shaft. And then they bailed out that with creating a housing bubble. It took 15 years for the NASDAQ to retake that 5,132 level again. And then, going back to the hyperinflation, it went from 5,000 to 15,000. And higher than 15,000 in a matter of 2 years. So think about that. That's exponential. And this isn't because people are going out and spending or earnings and they're making productive goods. This is financialization, and this is inflation, and this is U.S. dollar debasement. So the dollar is going to collapse. U.S. dollar hegemony is going to be finished within the next few years. A perfect example of this insanity is Hertz. The Hertz Corporation went bankrupt in 2021. And when they were bankrupt, the Momos on Robinhood pushed the stock of a bankrupt company, which means its equity is worth zero, up to over $60 a share. And then Hertz said, let's issue some more worthless shares. And a judge said, you can't do that. So that was an example of how insane the pricing is. Now, after a couple months in bankruptcy, Hertz came out and said, now we're going to buy 100,000 Teslas. So they're going to spend $4 billion on 100,000 Teslas, or maybe a little over $4 billion. And when that announcement came out, Elon Musk's PR team had the price of Tesla, the market cap went up several hundred billion. So how is that proportional? I mean, we just have stuff trading in the stratosphere that's absolute lunacy. So this is definitely going to end badly. It's worse than 1929 and 1999 combined. Valuations have never been this stretched in the history of the planet. No, it's not different this time. It's not different next time. It's never different. And this is going to end exceptionally badly for the people who are long these trillion-dollar zombie companies.
So speaking of the price signals, I mean, before even the C word happened and the pandemic and lockdowns followed and the stimulus checks and the trillions of dollars printed, we saw negative interest rates. That's not supposed to happen, had never happened in thousands of years of human history. Then we had negative oil prices trade for a brief period right before the pandemic hit. Then now during the pandemic, we've had trillions of dollars given to people who don't have to work. That has perhaps happened for some aristocratic classes like pre-revolutionary France or maybe ancient Greece right before they collapsed, where people of the empire didn't have to work at all, but they've been consuming mass amounts. And we've seen the likes extraordinary price action as well with container ships. We saw used car prices go above new car prices. So 2 years later, your car is worth more than you bought for it. So these are just like extraordinary sort of numbers. But we're heading into a midterm election in 2022. In the last minute, in this first half here, what do you have to say about how are they going to be able to print more money? Do you expect more stimulus? Is it going to be possible to pass? Will it pass?
Of course they're going to have more stimulus. They don't have any other choice. They box themselves in. I mean, they might raise rates, but then they're going to have to realize it's a policy mistake, and all heck is going to break loose, and it's going to be the end of their tightening. There has never been a tightening. And you have to understand that all the people who are trading these markets right now, a large portion of them are very young, and they've never seen what's called a bear market. And they believe that the central bank's role and responsibility is to bail out their bad positions. And that's not the central bank's job, but the central banks now believe that that's their job, but it's bailouts for billionaires and everybody else at the cost of the middle class and the cost of everybody else. And this is why we have record wealth inequality that's getting worse and worse and worse until you have the fabric of society being torn apart. And this is tribalism that we're seeing right now, that they're trying to make worse. They're trying to get people to fight with each other while the greatest economic plunder in history goes on.
Wow, this is exciting. We're going to take a break. When we come back, much more with Mitch Feierstein, author of Planet Ponzi. Don't go away. Welcome back to the Keiser Report. I'm Max Keiser with Stacy Herbert, our special guest, Mitch Feierstein, for this year-end blowout special. Hey, Mitch, let's talk about 2022. It's coming up pretty quick here. What are your thoughts? What are we going to see? What are the major trends?
I think we're going to see more buyouts, more stock buyouts that should be illegal. I wrote an article about American Airlines and their equity buybacks in 2021. And you saw that what happened was, I've never seen this in my career, where the CEO of American Airlines went out and he spent about $15 billion on share buybacks. And he was paid entirely in equity. And I've never seen that happen. So if the stock price went up, he got paid. He banked over $100 million. And then he had to, since the balance sheet was so weak when the C word happened in March, and they didn't build the balance sheet. Instead, they were speculating on share buybacks. They had to go hat in hand to the government and get a $20 billion bailout from the government and have to sack most of the employees. So he's still the CEO. So look, there's no penalty for taking massive amounts of risk. This is a problem. And now they're allowing the banks to do buybacks again. They had a bumper buyback year in 2021 because the Fed said you can buy a limited amount. Yeah, well, I don't know what limited means, but Bank of America was in there buying at least $25 billion worth of their own shares. So the prices of all of these financial companies are hitting record new highs because they're borrowing money at near zero or zero from the Fed and buying shares back and taking massive bonuses, because obviously when your share multiple goes down, you get to pay yourself. So why would that stop? As long as the free money keeps coming from the Fed and this insanity goes on. But I'm telling you, the music will stop. It has to stop. And when it does, it's going to be mighty ugly.
In the meantime, the party is rocking. It's been rocking since 2008, 2009 in the financial crisis. 2021, we saw Elon Musk start the year worth about 80 billion. He ended the year worth about 300 billion. We saw a lot of those billionaires. Jeff Bezos raked in tens and tens of billions on the asset price increase of his stock, his stock ownership of Amazon, for example. So, since 2008, and QE and the intervention on the markets, we saw since then the first $1 trillion company. That now we have many $1 trillion companies. Is 2022 possibly the year that we see the first individual trillionaire happen? Like we might have as many as, say, Venezuela or Zimbabwe by the end of the year.
Well, yeah, I think that'll happen very quickly. I think that what you'll have is a currency collapse and a currency crisis. So, I mean, even though they're a trillionaire, or these companies are valued at several trillion, like Apple was approaching $3 trillion. Is any company worth that? No, it's not. And in history, you've seen it happen. But then they're quickly dethroned. And this is how markets work. I mean, this is just all on the basis of irrational money printing. And people need to realize that the central banks are responsible and cause the problem. The problem is the politicians are the same. The Republican Party is the same as the Democratic Party. And all they seek to do is cause tribalism and sow seeds of discord between different people, so they're fighting while the economic plunder goes on.
Yeah, we have seen some experimentation going on. Of course, buying back your own stock used to be illegal. Then under Reagan, it became legal, and it's been totally abused, as you point out. We saw negative interest rates on the sovereign debt, which is almost non-existent in financial history. Now we've got a new experiment on the horizon. This is new for me, and I'm a connoisseur of all these types of financial whiz-bang products. They're going to try to tax unrealized gains. Mitch, what do you make of this?
That's insanity. I mean, it's just another gimmick so that it looks like they're doing something. But, I'll tell you what it appears to be. And, you've seen like the weaponization of government agencies, the weaponization of the FBI, the weaponization of the IRS, where they threatened in 2021 to look at $600 per person, which is ridiculous. They'd have to hire 5 million people or more to look at a $600 cash transaction over the period of a year in a bank account. The Food and Drug Administration, the CDC, all of these agencies have been weaponized. And what they're being used for is to go after political enemies that disagree with the popular narrative of the established regime who's in power right now. And this is a really dangerous time in history, because if you disagree with the narrative, you get censored and shut off, like I've been cut off on Twitter. And it's a bad time. When stuff like this happens, bad things happen, Max. And when you have extreme valuations, bad things happen. And that's why, I think there's the population in general has lost trust in the media, and they should, because, it's outright dishonesty. It's not fake news.
We've had dishonest price signals. They've squashed all of those. And now it makes sense that they would, after the price signals have been tamed and destroyed and silenced, that they would start to silence the people. But there are still, some price signals that they can't hide, like the value of your cash, right? And you see that in the increase. While it's going up in asset prices, obviously you see euphoria. People love it. Just like early days of Weimar Germany, people love their asset prices going up. You spend a lot of your time in the UK. Do you think the British pound this year could break the buck? It started the 2008 financial crisis at over $2 to £1. Now it's down closer to $1. It's heading down there. Could it break the buck this year?
I've been following sterling for my entire career, which has been multiple decades, as I'm sure you guys know. So look, if you look at the chart of sterling, you can see that sterling, the real collapse in sterling was when the Bank of England under Mervyn King decided to print enormous amounts of money, and sterling dropped 34% on the left-hand side of that chart, as you can see. And then, it dropped all the way down to 138, I think was the low. And then it bounced around until they hired Mark Carney. You know him, climate change Mark Carney now. Mark Carney, the ex-Goldman, ex-Bank of Canada, the housing bubble Mark Carney, housing bubble in Canada, housing bubble in the UK. He said, we're going to have escape velocity in the UK. And then sterling reacted. That was 2013-14. You can see on that chart. It went up to 170 because he said he was going to raise rates. But of course, like any of these central bankers, it was a total lie because you can never taper a Ponzi scheme. So then you saw when he didn't, he had to cut, they actually cut rates. And then sterling dropped back down to probably around in the 140s range. And then you had Brexit, and it was still around the 130 and change range. So Brexit really didn't impact sterling. I know that everybody likes to blame Putin and they like to blame Brexit, but you've had sterling hovering around this 138 area since the 2008 credit crisis. So there's always a crisis that they try to blame stuff on. Brexit, great financial crisis. Next will be the climate crisis, or the next crisis will be a cyber attack, the Russian cyber attack.
But is it going to break the buck? That's all we want to know. We don't need to explanation.
Yes. Because
okay.
what they're doing, what they're going to do is blame the collapse in sterling on another crisis, but it's not. It's because they're printing. Like now they printed because of the C word in March of 2020 has driven everything much lower, and the government's been printing more money. So when you print more money, it's currency debasement. So sterling is way overvalued right now, and it's going to continue. I think it'll go to parity with the US dollar, and I think the US dollar will get slammed even further as well. I'm not very bullish on any fiat currency at all. So this is the good part of this conversation, that I think there are other asset classes that are grossly undervalued and remain grossly undervalued. And I think people need to explore what those are and how to express those in good trades where they can actually make money rather than lose money on buying something at the peak of a bubble when it's the biggest hysteria. These are manias, and when you invest in a mania, you get killed, you get slaughtered. Look, bulls make money, bears make money, and pigs get slaughtered, and that's an adage you have to live by. And you look to find asset classes that are fairly priced or underpriced, otherwise you don't play.
Right, and all this money printing, of course, has started a huge run in the commodity markets. As you mentioned, oil is moving up quite aggressively. We see moves in copper. We see moves in aluminum. We see moves in agriculture. We see moves in everything. Bitcoin making new all-time highs. Everything is making a move, Mitch, except the one inflation indicator that people have used for thousands of years, and that is gold. Is the world just conspiring to make Peter Schiff look bad?
Well, I don't know. Look, I started buying gold back in 2000 when it was 300 an ounce, and I'm never going to sell that position out. But I think everybody needs to have metals. I think they'll have their day. They're going to have their day when fiat collapses. Will they try to seize the metals like they did in 1930s? Maybe. But, that's going to be a very hard ask. But I think we're in a very precarious bunch of levels with silver. I mean, you were very bullish on silver years ago, I remember. I've been bullish on silver from $14. I think there are a lot of commodities out there that are underpriced and undervalued. And as you get inflation, every single commodity is going to take off, because it's not a matter of, when you can buy any asset near production value, you have to buy it. It doesn't matter if you think the price if they can manipulate the price. But look, you almost had exchange failures in certain products. You actually had delivery problems with several commodities. And I think you'll see that again. You'll have delivery problems with commodities, and a couple of these ETFs will blow up, and people will understand that unless you have physical assets to back something by, it's meaningless. And, the real game changer that I think we could see within the next couple of years, or not we will see in the next couple of years, is maybe China or Russia or a combination of these countries coming out with a currency that's backed by tangible assets, like exchangeable for oil, units of gold, copper, silver, I don't know, maybe some cryptocurrency, but you'll actually be able to exchange it, because fiat currency is backed by nothing. I mean, what is it backed by? A promise to repay the debt of the sovereign that's issuing it. And when people realize that the sovereigns are more than overextended and can't repay their debt, they're going to say, well, I'm not going to buy that. Where am I going to put my money so that it doesn't erode like in Weimar Republic or Zimbabwe?
And quickly for the last minute here before we head into the new year, we mentioned Michael Burry. Michael Burry was shorting Bitcoin. He was shorting Tesla. He obviously got whacked on those. He's also shorting U.S. Treasuries. What do you see for 2022? Is there any relief to this poor guy's positions?
Yeah, the Treasury trade, I mean, Treasuries, whenever they go higher in terms of yield, I mean, they're going to be a buy because the Fed will have to come in and do QE infinity to bring the yields down, because you'll reach a point where they can't service their debt and then they would either default or worse. So yes, Treasuries are probably a buy and hold.
Sounds like he's hanging on to that widowmaker, Michael Burry.
Sounds like another carried out on a stretcher moment for that guy. He had one trick pony. That's it. He went down the drain. All right, that's going to do it for this edition of Keiser Report. Max Keiser, Stacy Herbert, Mitch Feierstein, the Mod Squad. Until next time. Bye, y'all.